Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 40 of the Forex market review. Today we're just going to look at one chart towards the end, but we're going to take a bit of more of a look of the news, the daily FX and CNBC, just to show what I do on a daily basis so I know what's happening in the market, because understanding the market can be a good way of understanding where a currency may be heading. So let's jump to the news, starting with the daily FX. So what you want to do is visit www.dailyfx.com/calendar. I like to go to the calendar generally on a Sunday or over the weekend for myself. That way I can prepare for the week coming as the markets are closed over the weekend. However, during the week you also want to have a look at the news, or at least make some type of alert on your chart to remind you that news is coming. Some people like to put these calendar advices in their mobile phone, and that way it will alert them to be prepared to watch the market to see which way it could be going. So why do I want to look at daily FX? Well, firstly, when you go here, you want to click on your local GMT time. I'm using +10, which is for Eastern States of Australia. You then go and filter on what you'd like to look at. I like to generally look at all the currency pairs, and I like to look at really just the high and medium news, and so I will just untick the low importance news. I then go ahead and click on the weekly view, and they'll give me what's happening from Monday through to Saturday, early Saturday morning for Australia, if anything's happening in the news front. I then go through and I start looking down to see what's sort of happening. Mostly on Mondays you'll find that there'll be limited news. This case is Monday had a bit of a news coming, but normally Monday is very light on. So if you want to do something, Monday is your best day to do it, because the market's going to be likely to be flat most of that time. So you just run through the news and you can just filter on your own pairs that you're looking at. I trade all the currency pairs, so I'll look at all the news and just see what's coming up. This case on Monday the 3rd of October at 17:15 Australian Eastern States time, or GMT +10, we had the Swiss retail sale. So if I was trading a pair which had the Swiss involved in it, I would want to have a guesstimate of which way I think it was going to go. Last time they had -2.2, and this time they were forecasting -2.7. So they were expecting a little bit worse than what they had last month, but the actual number came in at -3. So therefore retail sales was down 0.3% more than they expected. So obviously that's bad news. As you can see, it's highlighted red, clearly advising that the news was worse than expected, and therefore you would have seen some weakness against the Swiss against any other pairs. So if you're wondering why the Swiss had weakened at that time, then this is the reason why. Again, Canadian manufacturing PMI numbers, high important news. On Tuesday we had the dairy auctions, and we also had the US ISM manufacturing numbers. So previous month was 49.4, they expected 50.4, and they actually got a number of 51.5. It's blue here, so that number is better than expected, and you would have seen the US dollar strengthen. And from pretty much Tuesday at midnight in Australian Eastern States time, we've seen the US dollar just strengthen for the last 24 hours and just keep going. So that's one of the major factors of why the US dollar rallied. And so we want to know why it's happening, and that's because of that news. The Aussie Reserve Bank kept interest rates on hold at 1.5, so we probably didn't see much movement in the Aussie dollar based on keeping it unchanged, because what they expected is what they got. So we just work our way down and we'll see more news coming out. And if we look ahead of time, Thursday, we have the non-manufacturing composite numbers this time. So this is another high importance news. 51.4 last month. This month they're expecting 53. So a number above 50 is good for manufacturing, because that means they're actually still competing, still doing transactions, still building technology, and they're still progressing forward. A number below 50 means they're contracting and they're going backwards. So they want to see numbers above. That way they're still moving forward when it comes to those type of things. Their manufacturing isn't slowing down. So hopefully we get a better number than expected. If that's the case, you'll see the US dollar continue to rally. But if it doesn't, you'll see it pull back. And following down, further news, we've got some Canadian building permit numbers coming up and some other high non-farm payroll. So this Friday at 10:30 Australian Eastern States time is the non-farm payroll numbers. This is the most important number that people look for at the beginning of each month. So last month was 151K, we're expecting 170. So if we get a number above 170, then we're going to see again the US dollar strengthen. If we see the number below 170, we're going to see it weaken. And depending on that outcome is how the market will play. So unfortunately, you can't determine what the number will be. You can just look at history. And what I like to do is I like to record the data for each of these news events into a spreadsheet. And I follow that on a daily and monthly basis. And that way, if I can see a lot of negative news occurring on the US dollar, and then I can see the Fed coming out with an announcement to whether or not they want to increase interest rates or not, I would look at that and go, well, a lot of the data was poor. So I would guess that they won't increase interest rates, and therefore I might make an educated gamble on shorting the US dollar prior to those announcements if I get a good technical setup. So that's why we want to use economic news coming up. The other thing we want to look at is cnbc.com. And we want to look at what's happened with the market overnight so we don't get any surprises. So in Australia, when we wake up, the first thing we want to do is click onto the US session and just to see what happened. So here I can see the stock market fell, and I click on it, it says stocks close lower as the dollar hits near 2-month high. Gold sheds 3%. So what I'm expecting before even looking at the charts, that the US dollar has rallied overnight, and obviously with that Tuesday USD manufacturing number being good, that doesn't surprise me. And then the stock market, the US 30, has fallen. You can then go through and read some information about what they're talking about and what happened and what may have drove the market in that direction. And that will give you an understanding of why that happened. I then go back, and then if I want to have a look, if I'm trading gold and I want to have a look at the gold and see what happens with gold, just go click on the gold tab here on the front homepage, and then you can see what's happened with gold. And if you're expecting to see what's happened with oil, then you just go click on oil tab, and you can see oil price rises on report US crude stock draw. Again, click on that, read a little about the oil if that's what you're trading, so you know why the oil has been moving, where they think it could go to. So they're expecting it could go to about the $50 barrel marker. It's sitting around 49.18. So would you be buying this? No, I wouldn't be buying this because it's already moved. As you've seen from our Twitter page and all the announcements and my past videos, we've taken this trade and we've exited. So we've made our 2-for-1 profit and we've moved on. So we got in prior to all this movement because the technical setup looked good. The news came out, drove it higher, we've exited. Now that the news is coming out positive, we're out. Other people jumping in, but that's a no-no. Don't jump in after it's moved. You want to be getting in before the market moves. So try to find an edge of which way the market's going and then use it. These websites, CNBC and Daily FX, just to let you know what's happened overnight, why it's happened, so you can sort of adjust your portfolio of why you're trading and which way you're trading. So if we jump to the charts now and we start off from the USD yen, firstly, before me getting in, I always like a technical setup. So what I'm looking for on this weekly time frame, I can see some wave patterns occurring. So you want to try to get yourself good at understanding waves. So keep watching my videos and you'll get a good inkling on how to trade waves. I'm just going to go in, drop some numbers first, and then we'll go and discuss what all this means and where we think it's going to go. So what I've done is, you can see, I can see 1, 2, 3, and now 4. So generally 1 and 2, wave 1, back for 2, they're the hardest to see. In this time frame, we can clearly see down for 1, up for 2. 2 comes back all the way to 61.8 Fibonacci retracement. That's where we like to consider it the first point of looking for shorting it. So it's come back to there, but it can come all the way up to the top of wave 1. It just can't break the high. So if it closed above these highs, that would cancel this 1 back for 2. Because it's come down for 1, up for 2, didn't break the highs. If you're taking a position lower, you could just enter the market around about these levels, put stops up here of about 400 pips, and try to get out before this 200 EMA line. So therefore, you would have easily made yourself a 1 to 3 risk to reward. But sometimes this is hard to pick. So the first thing I like to do, and the easiest way to identify, is look for this large AO. So as you can see, it's moved higher. We can see a large AO here. It's moved up, down, and now it's gone back up. This is the first time we've had a large AO on the downside. So this is what we called the wave 3. We then go from back to the beginning, and so roughly around the start of this AO, we know the beginning of wave 3. And when this comes back to the zero line, so this is the zero line right through this middle here, so it's kind of come back and close up just above it, then we know this is the end. So at the moment, we'll assume this is the end. This is wave 3. Wave 4 will come back to about 50% is where I like to trade it. It's got to come back to at least a minimum 38.2, and that's where this 200 EMA line is. So if it comes back up, it's probably going to find some resistance around this 200 EMA. I may consider a short position on a lower time frame around here if I see that occur. We then click to a lower time frame. So we're looking for a pullback higher. Now we're seeing on a daily time frame, we're seeing down, up, down. We're seeing it slightly push higher. So remember, I wanted to come back to this 38.2. So it's likely we're going to be pushing back higher up to these levels. So we're now just trying to find some type of entry. On a 4-hour chart, we're starting to see this large AO. So we see a big, large AO move up. When this comes back to zero line, we're going to see it pull back down, probably test this 200 EMA on the 4-hour chart. We probably could look at going long around those levels there. On a 1-hour chart, we can see a movement 1, 2, up for 3. So when this comes back, this should also be looking at a pullback for 4, up for 5. So we don't want to get in at the current levels because we have this DSR resistance here. That's where we'd want to exit our trade. We can see it bouncing a few times around this level here. So to me, it's already way overbought. So I want to see a bit of a pullback. So I want to see it pull back on this time frame. So I'd be looking at using my Fibonacci retracement tool, seeing it pull back to around about this 200 EMA line on the 1-hour chart, which is similar to the 4-hour chart, putting stops somewhere down here of about 100 pips, and then trying to go all the way up to this first DSR level. So risk 100 to make at least 200. That's my 1 to 2 risk to reward. Therefore, I will not consider a trade unless it comes back to these levels. If you don't have the right risk to reward, you don't want to trade it because there's no point getting in and getting stopped out for some resistance areas. So thank you for that. That was week 40 of the Forex market review. I hope you enjoyed the slight difference there. I just showed you one chart, the USD yen trade. So we're looking for a pullback on that one for possible trade move higher to the next resistance area, and that would be our weekly wave 4 pushback higher to the 38.2% Fibonacci retracement area. So we wish you all the best in your success. Take care. Bye-bye.